While Democrats were celebrating last night's election results, stock traders went on a huge selling spree on Wall Street.
Yeah, the Dow closed at its lowest level all year, dropping below 13,000. Taking a look at the closing numbers, the Dow fell more than 300 points. The Nasdaq fell by 74 points, and the S&P 500 down 33 points. Joe Krier from Krier Wealth Management is joining us now to break down the numbers and try to explain why it was such a brutal day on Wall Street.
So, Joe, was this a reaction to the outcome of the election, or was it more that the day after the election, the reality of what is being called the fiscal cliff bubbled back to the surface?
I think it goes closer to the fiscal cliff side of things. And, you know, if there is a reaction to the election, it has to do with capital gains tax rates potentially going up and tax rates on dividends going up. So people kind of trying to clean up their portfolios before the end of the year. But the fiscal cliff is definitely the big looming dark cloud over Wall Street right now.
And that's like $600 billion in spending cuts and tax increases due to kick in early next year. Could it derail any economic recovery that we have?
That is the thought. And, you know, the fiscal cliff in and of itself is good news. It's something we need long term. But when you're talking about an economy that's on life support, to suck that much money out of it right here would surely send us into a recession January 1.
Parsing the statements coming from Capitol Hill today, John Boehner, Harry Reid, any signs of an olive branch that they really might be able to make a deal to avert this?
Well, coming out of the election again, you basically have more of the same. The White House is the same, the House is the same, the Senate is the same. The Democrats picked up a couple of seats, but essentially the balance of power is unchanged. And looking at the last 4 years of budget negotiations, nothing really got done. And Wall Street was looking for those olive branches to be extended during the day today. Nothing really materialized, so the selling sort of accelerated as we went through the day.
What are you telling people? Should people be worried? What should they be doing?
Yeah, this is high tension time. And, you know, beyond the fiscal cliff, which is a short-term problem, of course, we have the debt, accumulated debt of $16+ trillion. And that's something that is looming out there that's very large. We need to see Senate working together to getting this solved at least a little bit at a time. Otherwise, it doesn't look too good for 2013 in the markets.
All this year, we've been hearing Europe, and then the market goes down, and then they calm down, and it works its way back up again. Then somebody mentions the Europe word again, and off it goes. How much of an influence is that?
Yeah, that was an influence today. Remember, the markets were shut down for a part of last week. So going back 8 days to Hurricane Sandy, things got shut down, and then the markets kind of glided into the election. And usually over a weekend, the markets are digesting 2 days worth of European and Chinese news. Now they had 8 days worth of that news to digest on top of everything else. No wonder the market was a little crazy today.
A final word to investors out there who are watching and hopefully not biting their nails right now, Joe.
Yeah, my thought is pay attention to things and err on the side of conservatism right now. Don't get too crazy with this market.
All right, Joe Krier here joining us live to respond. Thanks so much, Joe.